You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome back to the Deep Dive. Today, September 17th, isn't just another date on the calendar. It really marks a monumental day for global markets, for policy. Decisions are unfolding right now that are set to send pretty significant ripples across economies worldwide.
Yeah, big day.
And we're here to cut through some of that noise. You know, all the headlines on currency markets, commodities, trade, geopolitics, and pull out the really important nuggets for you.
And the central focus, really the anchor for our whole deep dive today, has to be that highly anticipated Federal Open Market Committee decision, the FOMC, coming later today.
Right. And our promise to you, as always, is to try and connect these seemingly disparate threads. You see a headline about the euro fluctuating, another about oil prices, maybe something about tech chips, and you wonder, how are these really linked?
Exactly. We'll provide that shortcut, hopefully illuminate the complex interplay of all these global forces, show you how one policy shift, or, one market reaction, can trigger a whole chain reaction.
It is fascinating just how interwoven it all is, especially on a day packed like today. Yeah. So let's dive straight in. Central banks and currency carousel. The day of monetary policy. The U.S. dollar. It's showing a slight firmness this morning, finding some footing after pulling back recently.
It is, yeah, a little bit firmer.
But for many, the real story today isn't just about a potential rate cut, is it? It's figuring out the Fed's true intent for the rest of the year.
Precisely. Though, a 25 basis point rate cut from the FOMC, that's largely priced in, widely anticipated. But what traders are really scrutinizing, what everyone's watching for, are things like the updated dot plots.
Right, those forecasts from the committee members.
Exactly. They show future rate expectations, and you get a real sense of the range of views, sometimes quite different from the market consensus. And alongside those, you're watching the vote split any dissenters. And of course, Fed Chair Powell's press conference. They'll be crucial for clues on the policy path into year-end.
So the communication, the forward guidance, that's often more impactful than the actual rate decision itself at this point.
Absolutely. It shapes market expectations for months to come. It's all about reading between those lines.
Okay, so while the U.S. is gearing up for that, the Eurozone, it has its own things going on. The euro, for instance, is a bit softer right now.
It is, yeah. After hitting that multi-year high yesterday, just above 1.1870.
Feels significant. Is this the European Central Bank's influence or something else?
Well, that softness, it's notable, and you can trace it back to some recent data points. The Eurozone's final HICP inflation reading, harmonized index of consumer prices. It was revised down slightly to 2.0% year-on-year.
Okay.
And on top of that, the ECB's own wage tracker showed only marginal changes. So the insight for you there is these data points might suggest inflation is maybe less persistent than thought, which gives the ECB a bit more policy flexibility.
Potentially dampening expectations for tighter policy down the road.
Exactly. And that influences the euro's value even after that period of strength. So even a small revision can shift things.
Interesting. Okay, shifting focus again. Let's go across the globe. The Japanese yen, it's on a remarkable 3-session winning streak.
It is.
Now, given Japan's, persistent economic challenges over the years, is this just a reaction to recent trade data, or is something deeper happening?
That's a good question. The yen's recent strength, primarily people are attributing it to better than expected Japanese trade data. The deficit was smaller than expected, and the contraction in exports was a bit milder. So that positive economic news certainly gives immediate support.
Okay, makes sense.
But, and there's often a but, the insight for you is that even strong current data can't fully shield an export-heavy economy like Japan from future trade issues. Analysts are already warning that those anticipated U.S. tariffs will likely weigh on shipments in the coming months. That's a significant future challenge for Japan and, by extension, for the yen's ability to keep climbing.
So present strength versus future vulnerability. Got it.
It's a classic balancing act.
Okay, what about sterling? The British pound was largely unchanged after the latest UK inflation data. Did the Bank of England get any clearer signals there?
Well, the data showed headline CPI steady at 3.8% year-on-year. Core CPI eased a bit to 3.6%, and services inflation cooled to 4.7%.
All right.
These figures, while important, didn't really move the needle much for sterling.
Right.
The key takeaway seems to be that markets still expect the Bank of England to hold rates this week. Attention's now really shifting towards fiscal policy.
Ah, okay. How so?
Well, the Office for Budget Responsibility, the OBR, they're reportedly preparing to downgrade productivity forecasts. And that could have direct implications for government spending, the broader economic outlook, maybe signaling more economic pain ahead rather than immediate monetary policy shifts.
Something to watch. And what about Canada? The Canadian dollar, often linked to commodities, is under a bit of pressure.
It is, yeah. We're seeing commodity-linked currencies generally softening ahead of these big risk events today. And for the Canadian dollar specifically, markets are pricing in a pretty significant chance, like 92%, of a 25 basis point rate cut from the Bank of Canada later today.
Wow, 92%. That's high conviction.
Very high.
Yeah.
And that strong expectation is definitely adding to the pressure on the loonie. The critical insight here really is seeing how these central bank decisions and the domestic data are so deeply entwined. It creates this real domino effect across global currencies, hitting trade, investment flows.
What happens in one central bank really does reverberate, especially on a day like today.
Absolutely.
And that domino effect, that's a perfect segue. These currency shifts, central bank moves, they inevitably ripple into commodity markets. Let's talk crude oil. Trading with modest losses today. WTI near $63, Brent just above $67.
Yep, ticking down slightly.
Now, normally we'd look at supply, demand, maybe inventories for oil price moves, but the cause cited for these losses today is, well, it's a bit surprising.
It really is quite illuminating.
Yeah.
The pressure on crude isn't coming from the usual suspects, like a supply glut or a sudden drop in energy use. Instead, it's being driven by reports that China's internet regulator has ordered major tech firms, Alibaba, ByteDance included, to halt purchases of NVIDIA's China-specific RTX Pro 6000D chips.
Wow, a tech chip decision impacting oil.
Exactly. The crucial insight for you is how, in today's world, a seemingly isolated tech policy decision in one country can instantly translate into a measurable impact on global commodity prices. It dampens overall risk sentiment, weighs on broader energy demand expectations. It just shows this new layer of systemic risk, really.
That is a perfect illustration of how interwoven everything is. Okay, meanwhile, gold. Often the safe haven, it's retreating slightly after setting a fresh record high yesterday.
Yeah, pulling back a bit. Spot prices are around $3,680 an ounce currently.
What's pulling it back from that peak today? Is it just profit-taking?
It looks like a classic reaction mostly.
Yeah.
A firmer dollar is part of it. When the dollar strengthens, gold, which is priced in dollars, gets more expensive for holders of other currencies, reduces the immediate appeal,
Right.
and also just pre-FOMC caution. Ahead of a big central bank announcement like this, investors often pull back a little, take some risk off the table. That can cap the upside for assets like gold.
Makes sense, but is this just a short-term thing?
Well, that's the interesting part. The forward-looking insight is quite compelling. Deutsche Bank, for example, just raised its 2025 gold price forecast to an average of $4,000 an ounce.
4,000, wow.
Yeah, and they lifted their silver forecast, too, to $45 an ounce. They're citing structural demand trends. So while you might see this short-term pullback because of the dollar and pre-FOMC jitters, the longer-term outlook driven by fundamentals still looks pretty robust for precious metals.
So maybe a temporary dip in a longer-term upward trend.
Got it. And what about other metals? Silver, base metals, are they feeling the pressure too? Yes, definitely. Silver's down roughly 1% in early trading, kind of echoing that caution we see in gold. And base metals, more broadly, are also under pressure. 3-month copper, for instance, slipped back below that psychologically important $10,000 per ton level.
Okay.
So the overarching takeaway here is just how sensitive commodity prices are. It's not just simple supply and demand anymore. Geopolitical risk, these emerging tech policies, currency strength, it all feeds in.
It really is all connected. A ripple effect, like you said, from a chip ban to the price of copper.
Exactly.
Now, these ripples we're tracing, from central banks to commodities, they often start with those intricate negotiations in global trade and diplomatic maneuvers. So what's unfolding on that strategic chessboard today? Let's start with TikTok. The White House extended the enforcement deadline to December 16th.
Right.
This feels less like a genuine reprieve and more like a tactical pause in a much bigger tech and trade standoff, wouldn't you say?
Absolutely. I think that's the right way to frame it. This extension is specifically to give ByteDance more time to finalize a sale. The proposed deal, as it stands, aims to create a new U.S.-based entity, but ByteDance would still retain a 20% stake. The critical insight here is seeing how deeply intertwined national security concerns, economic interests, and, control over technology have become. And China's response is telling, too. State media stress that any approvals related to TikTok technology exports, they'll follow Chinese law, asserting their authority.
But they also said an agreement is in everyone's interest.
They did, which indicates maybe a pragmatic desire for some kind of resolution, despite all the underlying tensions. It's a very delicate balance.
A delicate dance, indeed. And speaking of U.S.-China, we're seeing reports suggesting they're in the final stages of arranging a state visit to Beijing for President Trump.
Yeah, those reports are circulating.
That sounds like a major diplomatic gesture. What could be the actual deliverables from a high-profile meeting like that, beyond just the optics?
Well, a visit like that would be significant, signaling maybe a potential de-escalation of some tensions. The reports suggest that large-scale purchases of U.S. goods are forming part of the agreement.
Ah, the purchase agreements.
Exactly. For you, the takeaway is that these large-scale purchases are often a key component in high-level trade talks. They serve as tangible outcomes, something to show progress, help rebalance trade flows, at least on paper. It's a classic move.
Right, showing goodwill and tangible benefits. Okay. Beyond the U.S.-China dynamic, any other key trade meetings or, say, sanctions discussions happening that are creating ripples?
Definitely. U.S. Trade Representative Greer is scheduled to meet with South Africa's Trade Minister Tao on Thursday.
Yeah.
That highlights the ongoing dialogues with other global partners and diversification efforts. Meanwhile, over in Europe, the EU is preparing discussions on its 19th sanctions package against Russia.
19th? Wow.
Yeah. And the significant implication here for you is that this package could include blacklisting additional Chinese firms, ones linked to Moscow's war effort.
Ah, bringing China into the EU sanctions potentially.
It shows how complex trade negotiations are now. They really involve national security, tech competition, incredibly delicate diplomatic balancing acts, with direct global implications for businesses, consumers. It goes way beyond traditional tariffs and quotas now.
Truly a multi-layered strategic chessboard. And this leads us directly into our next segment. Geopolitical hotspots and diplomatic dance, tensions and talks. Over in Europe, the IAEA, the International Atomic Energy Agency, reported shelling near Ukraine's Zaporizhia nuclear power plant. That sounds incredibly alarming. What exactly did they see?
It's certainly a very concerning situation. The IAEA observed black smoke rising from 3 sites, but outside the facility itself. That visual detail is a stark reminder of the huge risks involved near such a sensitive site.
Absolutely.
But crucially, they also reported no casualties or damage to the plant itself, which offers a small but significant measure of relief amid the tension. And following this, the EU is expected to propose more sanctions later this week, reinforcing their position. But here's the counterbalance. The insight is that even as tensions are high, some diplomatic channels seem to remain open, strategically. Russia's Deputy Foreign Minister Ryabkov said dialogue with the U.S. continues, and Moscow is ready to expand energy cooperation, including on the Sakhalin-1 project.
So a complex mix of confrontation and selective engagement.
Exactly. Keeping some lines open while escalating elsewhere.
Okay. What about the Middle East? Any significant diplomatic shifts or new frameworks emerging there?
We're seeing varied positions. Japan concerned it won't recognize a Palestinian state at the upcoming UN General Assembly. That's a specific diplomatic stance. On the other hand, Palestinian sources have signaled they are ready to discuss a new framework for ending the war with Israel. That indicates a potential, maybe fragile opening for talks.
A potential opening. Okay.
And adding to the mix, Iran's deputy foreign minister is set to hold calls with European counterparts on Wednesday about ongoing regional issues. So the overarching insight really is just the continuous, high-stakes nature of international relations. Even small incidents or diplomatic shifts can have far-reaching consequences, often unpredictable ones. Diplomacy is rarely straightforward.
No, definitely not linear. It's clear the world stage is incredibly dynamic. And while, the West is grappling with rate decisions and these geopolitical flashpoints, Asia seems really focused on strategic growth and self-reliance.
That's a good observation, yes.
Let's turn to Asian insights and economic ambitions, growth and self-reliance. Hong Kong's chief executive, John Lee, reaffirmed the city's 2-3% growth target for 2025. In this challenging global environment, what's his strategy to hit that?
Well, his plans seem quite comprehensive. It looks like a dual strategy: internal development and external attraction. Domestically, they're talking about accelerating housing development, creating new land for big projects, and setting up a task force specifically to help Chinese companies expand overseas using Hong Kong as a base.
So positioning Hong Kong as a gateway.
Exactly. The insight for you is they're not just hoping for organic growth, they're actively trying to shape it, be that strategic hub. And then externally, initiatives to attract Southeast Asian companies to list in Hong Kong, encouraging banks to set up regional headquarters there, reinforcing its role as a key financial center in Asia.
Very proactive. And China itself, you mentioned the tech side earlier, is continuing that relentless drive for technological independence, especially in semiconductors. What's the latest there?
Yeah, China is definitely pushing hard on its domestic semiconductor ambitions.
Yeah.
A specific example, SMIC, that's Semiconductor Manufacturing International Corporation, they're testing locally manufactured chip-making equipment right now.
Okay, bringing production onshore.
Exactly. This isn't just a technical step. It's critical to their big goal: reduce reliance on U.S. technology. The profound implication for you, for everyone, is that this strategic move aims to secure their own supply chains, their own tech future. And that could dramatically reshape global tech markets, supply chains, innovation, everything.
It's a huge undertaking with massive consequences. Any other signs of China's industrial strength or broader economic ambitions we should note today?
Yes, actually. Chinese industrial data for August showed strong gains in refined copper and alumina output. That points to robust activity in key industrial sectors, despite some of the global headwinds. And a striking statistic from that report: iron ore production was up nearly 9% year-on-year, reflecting sustained demand for raw materials for their industrial base.
It's still hungry for raw materials.
Very much so. The collective insight here is that Asia, particularly China, remains this region of dynamic economic ambition, strategic tech development, with huge implications for global supply chains, innovation. It's a powerful counter-narrative to some of the slower growth stories elsewhere.
What an incredibly busy and really pivotal day we've covered. We've just taken this deep dive, exploring how interconnected everything is. Central bank decisions, especially that FOMC one everyone's waiting for, commodity market shifts, those complex trade talks, sensitive geopolitical developments, and these strategic economic ambitions across the globe.
And that's precisely it. Connecting these diverse threads, that's what allows you, the listener, to grasp the bigger picture, is how you stay truly well-informed in this rapidly changing world. Seeing how a decision in, say, Washington can send ripples to commodity prices in London, or how a tech policy in Beijing can influence global trade and even security.
Absolutely. So as we consider all these profound global dynamics, here's maybe a final thought to mull over. How might the decisions made today, whether it's in a central bank boardroom, a diplomatic meeting, maybe a tech regulator's office, how might they reverberate through your own daily life and the broader economy in ways we might not even fully anticipate yet in the coming weeks and months?
Something to think about.
Definitely. Thank you for joining us on the Deep Dive. We'll catch you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.